Hello traders, and welcome to yet another episode for the 2024 mentorship. And today I want us to look at the supply and demand. So in this video, what I've done is that I have simplified the concept of supply and demand to make it easier for you to understand. The disclaimer is always that trading leverage product carries risk, and therefore you need to have some adequate knowledge or education before you start engaging on trading. So when we talk about supply and demand, basically supply and demand in Forex is a popular approach among traders due to its simplicity and effectiveness in identifying potential price reversal and market turning points. So it basically involves analyzing areas on the charts where the price tends to react strongly, which indicates zones of high supply and demand. This supply is sometimes people call it resistant. Demand is sometimes referred to as support, or these levels are the demand levels are gotten from the support levels, and the supply levels are gotten from the resistant levels. So by focusing on key zones where the price is likely to reverse or react, supply and demand traders or trading provides a structured way to trade Forex market with less reliance on indicators and more on understanding price action. So this is a pure price action strategy. We don't use indicators, so we solely rely on price action. So the big question now comes in: how can you trade using supply and demand? So the first thing that you need to do is to understand the zones. So we have two types of zones. We have the supply zone, which is an area where the price has previously dropped sharply, indicating strong selling pressure that is resistant. It is often found at the top of a price move. I'll be able to show you this on the charts. Then we have demand zone, which is an area where the price has previously risen sharply, showing strong buying pressure that is support. It is usually found at the bottom of a price move. So after understanding the zone, the next thing that you need to understand is to identify. How do you identify demand zones on the chart? So the first thing that you need to look at is you need to look for sharp price movements that reacts or creates impulsive waves. That strong moves up or down after a consolidation or a range period. So when you're marking supply and demand levels, we want to mark them from a point of consolidation where the price was consolidating. Then we saw then the price creates an impulsive wave, all from a ranging period. So we see maybe probably periods where prices has been ranging for some time, and then now we can be able to mark either the top or at the bottom, depending on which zones we are marking. So in terms of supply zone, you need to mark the highest price where the last consolidation occurred before the sharp price drop. For the demand zone, you need to mark the lowest price where the last consolidation occurred before a sharp price increase. So these areas suggest potential points where future price reaction might occur. The third thing that you need to understand now is how do you exactly mark these zones. So the key thing is that the stronger the move away from a zone, either up for demand or down for supply, the stronger the level becomes. Zones where prices have retested multiple times and moved strongly afterwards tends to hold higher significance. So as a bonus tip, if the price moves quickly away from a zone without much hesitation, it shows that there was an imbalance between buyers and sellers, making that zone to be more significant or of interest for us as traders. The fourth thing is to wait for the price to return to the zone. So once a supply or demand zone is identified, don't immediately place a trade. So instead, wait for the price to return to the zone. For a demand zone, when the price drops back to the zone, you expect buyers to step in again and push the price up. For a supply zone, when the price rallies back to the zone, sellers are expected to enter and push the price down. Number 5 is what I call confirming a signal or confirmation signal. So while you trade or you can trade directly from the zones, many traders prefer to wait for confirmation signals, such as maybe you can use candlesticks patterns like pin bars or engulfing patterns that indicate potential reversal. Price rejection, so look for wicks in candlesticks that suggest a rejection of the zone. And there are other traders who use volume. So increased volume near the zone can confirm buyers or sellers' interest. So confirming is basically a way of being conservative. So you want to trade conservatively. But if you're trading aggressively, you can trade direct from the zone. Immediately the price taps the zone, you can take your trade. That is aggressive. But being conservative, you have to wait for the confirmation signal, either through candlesticks pattern, price rejection, or volumes. Then number 6, what is important is for you to set entry, stop loss, and take profit. This is very important. So your entry, you need to place a buy order near the demand zone and a sell order near the supply zone. So your stop loss need to be set slightly beyond the zone, that is above a supply zone, or below a demand zone, to account for potential false breakout, because sometimes the market can create what we call false breakout, or what we call a liquidity grab or liquidity sweep. So in terms of taking profit, you need to set your take profit based on the distance of the previous price move. All that is now when you're trading the ranges, or using a risk to reward ratio of 1:2 or 1:3 or even more. So you can also aim for the next supply or demand zone as your target, right? So either you can use the range as your target, you can use the risk to reward ratios, maybe 1:2, 1:3 as your target, again guided by the technicals, the technical levels, or also you can aim for the next supply or demand zone as your target. The key thing that you need to understand with supply and demand is that when a supply level is broken, it becomes a demand level. And when a demand level is broken, it becomes a supply level. Just as we say when the resistance is broken becomes support, and support when it is broken becomes resistance. So the same concept applies here. So in this chart, I have shown a demand zone. So when looking at this demand zone, what you can be able to see here we have an engulfing, that is a bullish engulfing. Remember, we said these are the types of candlesticks we want to find near these zones of demand zone. Also, if you look keenly, the price has respected these levels severally. And now when the price is coming to our entry, so we can say that this is a level of, this is a demand, a support level. Because if you're able to go to the lower time frame, because you can see this is the daily time frame, you'll find that this is a resistance, it's a support level. And then now you can see the impulsive move of the price from this zone. You can see how the price is moving impulsively from this zone, creating another even engulfing here. So that is a sharp price move. So then like we have said, we need to wait for the price to come back to the entry, so that now we can take our trade. All right. So remember, the first rule is to understand the zones. So after understanding the zone, you need to identify the supply and demand zones on the chart. And this is what I've done here. So this is the demand zone. We can see support level. We can also see the bullish engulfing. That is the engulfing candlesticks. And then you can see the impulsive move of the price. So what we need to do now is to wait for the price to come back to that level. And therefore we can take our entry. All right, we can take our entry immediately the price taps into this level. Also at that level, we can look for, at this level, we can be able to look for maybe rejection candlesticks pattern. Like you can see, these are pin bar. right? So maybe you can take the trade above that zone, or maybe when the price taps here. So for me, I usually take the trade in an aggressive way when the price taps my demand zone, and therefore your stop loss needs to be slightly below the demand zone. And your target, you'll be targeting the price to cover this range, right? You'll be targeting the price to cover this range, because for the price to come to push down here, the price was originating from this particular level, right? So our target will be this level, or you can use a risk to reward ratio of 1:2 or 1:3, basically in terms of taking your trades. So this also is a supply zone. As you can see in this supply zone, this level, this level, you can see here we have the impulsive move or sharp move of the price from this level, and therefore we need to wait for the price to come back to this level again, right? We need to wait for the price to come to this level, and that is where we have, or we get our entry. So this is NZDUSD, and some of these setups, these are the setups that we have traded successfully in our Telegram group, in our Telegram channel, which is a free channel. I will give the link to the channel in the description in this video, so that you can be able to join our channel and take advantage of these setups that we share there for free. And therefore you take your sell entry there, and you can see targeting the lows here, sweep of liquidity, or this was, I was just targeting a risk to reward ratio of 1:2, 1:3. So then the next thing that you need to understand now is how do you manage risk, or what we call risk management, when you're trading supply and demand. So always ensure you use proper risk management. The key rule of thumb is that do not risk more than 1 to 2% of your trading capital per trade, right? So if it's per trade, what you need to understand is that is when you're taking one trade at a time. But if you're going to take multiple trades, what is important is that do not risk more than 1 to 2% of your capital for the cumulative trades that you'll have taken. The reason why I need to emphasize that is because you'll find some traders will risk maybe 2% per trade, and they take like 5 trades or even 6 trades. So if you take 5 trades, risking each trade risking 2%, it means that the overall risk is 10%, which is very high risk in case all the trades goes against your analysis. So the key goal here is to ensure that all your cumulative, if you're going to take several trades at a time, all your trades cumulatively should not be more than 2% risk of your capital. So also what you need to do is to avoid entering trades when the price is in the middle of the zone, that is between a supply and demand zone, as it often becomes a low probability area. So this is what we say, that do not trade directly to the higher time frame, to the supply or demand level of a higher time frame. So if the price has already left the zone, already reached in the middle of the zone, so don't jump on that trade. Instead, wait and look for another proper setup. So there are some key things that you need to consider when you're trading this supply and demand as well. So supply and demand zones work best when combined with the overall market context, such as the trend or fundamental factors like news. So those that have been following our Telegram channel, you have seen how we have been able to show you this clearly, or those that attend our daily analysis sessions, you see how we have been able to, how we do it in terms when you're marking our supply or demand zone. So the key thing is you might want to understand the trend of the market. Also, you might want to understand to understand which type of fundamentals are coming and how likely are they to favor your analysis. So in a downtrend, you want to focus more on selling at supply zone, and in an uptrend, you want to focus more on buying at a demand zone. So the other thing is that time frame and trade style are important. So when you talk about time frame and trade style, what we mean is that supply and demand trading can be applied to various time frames, but higher time frames like the 4-hour, daily, weekly, charts tend to offer strong and more reliable zones. For the trades that we have been able to take in our Telegram channel, you have seen most of them come from the 4-hour time frame and the daily time frame, because the higher the time frame, the more reliable the supply and demand becomes. But does this mean that supply and demand does not work even on the lower time frames, like 1 hour, 30 minutes? No. Like we said, or like I always say, price is fractal, and therefore every strategy will form. Even in one minute, you'll find a demand and supply respecting the 1 minute time frames. In the 1 minute forming in the 1 minute time frame, you'll see these zones there. But again, what you need to understand, the lower the time frame, the less reliable a strategy becomes. For instance, when I say a less reliable a strategy becomes, it means that if I'm trading demand and supply from the lower time frame, you find that there'll be so many demand and supply levels, the chart will be dirty. Again, these demand and supply levels will give you like 5 pips, 20 pips, maybe max. All right. So again, it depends now on your trading style, the type of trader you are, whether you are a scalper, whether you are a day trader, whether you are a swing trader. But I would recommend, from my experience, when you're trading demand and supply, the lowest you can be maybe a day trader, and the best you can become when trading supply and demand is being a swing trader. So what I'm saying is that you can still use smaller time frames like 1 hour or 15 minutes chart for short-term trades, especially if you are a scalper. But there is a higher chance of false signals when it comes to these 15 minutes time frame, because the price will keep in these lower time frames, because the price will keep forming multiple supply and demand zones. So they'll give you like 4 signals. So if you're already in a supply zone, the price will maybe tap a demand zone, then give a false signal, thinking that the price is going to buy. Then you see the price pushing maybe more on the downside, right? So that's what we are talking. That's what I'm referring to. Then we have the pros and cons of supply and demand. So like, each and every strategy has its own pros and cons. Every strategy has its own pros and cons. And for demand and supply, basically the pros is that it's simple to understand and apply. As you have seen going through the concept, very simple to understand, very simple to apply. Can give high reward to risk ratio trades. So like you have seen in those that have been following us in our analysis and also our Telegram channel, you have seen high to risk reward ratios. Then it works across all markets and time frames. So you can use them in Forex, you can use them in stocks, you can use them in crypto, any market that you want to trade, any financial market. However, crypto is not yet a regulated financial market. Take note of that, but it still works even in crypto. So the cons is that it requires patience. So zones may take time to be tested. Like you've seen, when you mark those zones, you need to be very, very patient, wait for the price to come to your zones. Then there may be false breakouts or stop hunts, especially during periods of high volatility. This happens. I remember there is a time we had USDCAD really giving us a false breakout, but initially it went in our direction, right? So what I'm going to do is, as I give examples of strategy using supply and demand, this is basically like a summary of it before I take you to the chart to show you how it really happens. So the first thing, identify the zone, maybe on a daily time frame or 4 time frame chart. So spot sharp moves up if you're looking for demand zones, and sharp moves on the down if you're looking for supply zone. Then now wait for the price to retest those zones. After you mark the zone, wait for the price to retest the zone. So you switch to a lower time frame, like 1 hour chart, to look for the price retesting those zones. And this is actually, if you want to look for confirmations, this is why you want to wait for a confirmation in terms of signals like candlesticks patterns, price rejection. Also, you can consider, if you want to be more conservative, you can also consider change of character. All right, that is a change of character, especially if the price is reversing, right? Maybe at the top demand zone, or maybe at the top supply zone, or maybe at the bottom demand zone, because that is where reversals happen. But in the middle supply zone, on the middle demand zone, this basically is a continuation of the price. So in these top zones, you want to look for even a change of characters, that the price indeed has confirmed a reversal, so that now in terms of your entry and exit, you enter at the demand or supply zone when the stop loss, and you set your stop losses just beyond the zone, and set your take profit at the next maybe key demand zone or key supply zone, or maybe you can set using the ranges, or maybe you can set it using risk to reward ratios, right? So what I'm going to do is that I will take you to the charts and show you some few examples how we mark these supply and demand zone, which will basically now enhance your understanding. So let's go to the charts. So the first pair that we're going to look at is GBPUSD. Actually, we have been trading this GBPUSD. We have been selling GBPUSD, very strong sales. So I'll begin by the daily time frame. So from the daily time frame, you can see we have this drop. Then we had a consolidation here. You can see the consolidation. Then before the price pushed on the downside. So this is the sharp price move. You can see this is a Marubozu candlestick showing momentum on the downside. So what we need to do now is mark this zone. So this is how we had marked our zone, like that, using the this engulfing pattern, right? So, and this was our setup, right? Which you can get it from the daily time frame if you're trading from the daily time frame. So this is a setup that we have been running, that has been running the entire of this week. So targeting at least this level where we have a mid zone here, this is where our target we were targeting, right? But you can see up to the further the price has dropped almost to our target around 154 pips. So this becomes the mid supply zone, right? So looking for more sell. So we anticipate the price to push down to this level. So this is a trade that is running. We have already taken partials, put stop loss at break even. When you come to the 4-hour time frame, again, you find it was a very key level, again, even from the 4-hour time frame. You can see now minimizing the risk even from the 4-hour time frame. You can see how the price came here. I remember this day we had GBP retail sales, which pushed the price here to activate this entry. And we have seen the price dropping significantly. All right, we have seen the price dropping significantly. Initially, now from the 4-hour time frame, we had another entry we had taken from this particular level. Right, we had another entry we had taken from this level. As you can see, this some bit of consolidation here. Then we have the sharp move of the price from that region, taking out some liquidities here, then coming back to that zone, also giving us an entry, right? Giving us also another entry on the downside, right? I remember also we had some re-entries from these trades. We had some re-entries here after the price having pushed down, taken these liquidities. You can see there was some bit of consolidation here, then the sharp move of the price. So this was also another place for some re-entries, right, at that particular point. And that is basically if you had not caught the move, the bigger move from this level, therefore it means that you could have some re-entries around this particular zone. We also we can look at an example of maybe even NZDUSD. So NZDUSD, like you're saying, this is also a trade that we were taking last time. It has already hit our take profit, right? It was a setup. So as you can see, this is the 4-hour time frame. This is the supply zone. We have some bit of consolidation here, and then now we mark the zone, the last zone to the consolidation, and then you can see how price comes, taps into that zone, and we now get our selling opportunities. Here again, the price, you can see the consolidation, we have an engulfing, so we can mark a supply zone here. All right, so remember we are aligning ourselves with the trend. You can see it's a downtrend. So now we are looking for supply zones in the downtrend. So another supply zone here, and we take a sell, and you see the price pushing down. So all these zones that we have labeled, actually we have shared them even in our Telegram group. So click on the link in the description so that you can join our Telegram group. So here again, we had another re-entry yesterday for a sell. Also, this is a supply zone. So, and then you can see the price pushing down all the way to the target where we were targeting the price. So we were targeting the price to come to this demand zone, or this zone that we have here. So what is of importance now is for us to monitor if the price is going to break below this, right? So if we wait for the breakout below this zone, and if the price breaks below that zone, we'll be looking for a retest now, because this will be a demand zone that has been broken, so it becomes a supply zone. So we'll be looking for a retest, and then now we take price down all the way to this particular zone that we have marked here. I think from the daily time frame, you can be able to see clearly the zone, right? So these are very key significant zone that we have marked here, all because as you can see, we can even target here because this was the origin of the price pushing all the way up here. So meaning that this is the range, right? So it has to cover this range that it created here when pushing up. So that's how you can also be able to set your target. So when you look at a pair like maybe USDCAD, you'll see that these are some of the demand zones that we had. All right, sometimes back we were trading this pair, so you can see the setups marked there. So as you can see, these are instances of fake out. Like we said, sometimes fake out can happen. So, but initially you can see the price pushed up. So we are anticipating the price to come to this level, right? So this is where we had gotten a trade setup. This particular zone here, right? This demand zone. So then we had marked this particular zone, which was a supply zone as our target. And the moment now we have the price break above this supply zone, now the supply zone becomes the resistance zone. I mean, it becomes the demand zone, and we can see the retest happening here. And I remember we took some trades, pushing the trade all the way up. So if you look at another interesting pair like USDCHF, I remember also we had some entries for USDCHF. So we had some entries. So you can see here the price was really in a consolidation, right? Our target was basically the price to come to around this particular level, right? Because this is the range, as you see, the price dropped down to this level. Now, when the price is pushing up, we're anticipating the price to come to this particular zone. So also here was a consolidation. We had the price retest this particular level. So that is a supply zone, and you can see it was tapped, right? And the price pushing higher. But around this particular point, this is where we had our entry, right? Let me show you. So when you look at it from the higher time frame, the daily time frame, you might not really probably be able to see exactly how we took the entry. But if you come to the 4-hour time frame, now you'll start seeing that this was a zone of consolidation, right? This was a zone after the price pushing up, it pushed down slightly, more of a consolidation. Then you can see the sharp move of the price from that level, and therefore we can mark this level as our entry zone, right? We can mark that level as our entry zone, and you can see how the price comes into that level, taps that level, and then pushes higher. Alternatively, if you mark this, you can see this also is a demand zone. You can call this a demand zone, and we have the price break above it, and then now we wait for the retest of the price, and you can see now how the price pushes higher. So this becomes a demand level again. If you look at it even from the 1-hour time frame, now it becomes even more precise, right? It becomes even more precise, more clear. You can see the zone here where the price tapped inside that zone, and now you see the price pushing higher. So that is demand and supply. Very simple for you to understand. So it's not really complicated. So the key thing is for you to be able to backtest, right? I remember we also had this same concept with the Euro USD. You can see these are the setups that we have been taking. It has been a sell, so we have been looking for supply zones. So you can see where we began marking taking the trades from. So we have been pushing the trades down, right? We have been pushing the market down, like you can see. So the market has been pushing down. We were targeting the price to come to this level, but now the price reached this level and started pushing higher. So which is okay, right? Which is okay because we had the trade from here, but we began trading this setup from around this point when this zone was broken out. So this supply demand zone being broken becomes supply zone, and we start seeing the price pushing on the downside. So we have been riding this move all the way down to this particular level. So like you can see, demand and supply is very simple. It's not complicated. And it's actually one of the best strategies that you can use in terms of getting very high probability setup. But again, like I said, it requires a lot of patience, right? It requires a lot of patience. So you can see all these are trades that we have taken from our Telegram channel. Once you join, you'll be able to see AUD/USD. We have been selling from there. We have another sell here. All these supply zones we have been selling. So it's really, really, really simple and straight forward. So that being said, the key thing is for you now to backtest, to practice. And like I said, if you need guidance in terms of maybe identifying the zone, ensure to check the link for our Telegram channel in the description and join our free Telegram channel, and let's learn together even as we take these setups together. So thank you so much and have yourself a wonderful time. Until next time, keep safe.